What's the cure for the Nvidia hangover? Ben McMillan of IDX Advisors is here to tell us. All right, Ben. So, what I mean by hangover is, investors maybe get a little giddy when Nvidia earnings are on tap. And now today, the stock is down a bit. So, maybe they're not feeling 100% about the results. So, talk to us about why we are seeing a bit of a stock sell off.
Yeah, I mean, I think the short, simple answer is just sky high expectations. This is a stock where it's been kind of the poster child of the AI boom, and investors have become accustomed to Nvidia just, frankly, knocking the lights out for forecasts for so many quarters in a row that even when they have an earnings forecast like this, where revenue was up 56% year over year, profit was over $20 billion, which, by any other standard would be phenomenal. It kind of felt, already priced in and, a little bit disappointing. And so, if guidance didn't come in extremely strong, which it was good, but again, not what the market was expecting, we start to see a little bit of a sell-off here. And this is as you say, kind of the Nvidia hangover.
Let's talk about sales in China and a bit of the disappointment there. And, CEO Jensen Huang alluded to the fact that he might be open to a deal with the Trump administration about those high-end Blackwell chips with China, similar to the ones that he set up with the H20 chips. Explain what we saw in terms of what they said about China. And do you think a deal like that would be a good one?
Yeah, so I think it's interesting. So as you said, we had this precedent already where Nvidia struck what was frankly an unprecedented deal with the White House to sell a, slightly toned down version of their H2O chips, H20 chips. And so I think that's kind of sets a pathway to get this done with their Blackwell chips. And I think it's important, when Jensen Huang was talking in the latest earnings call, he emphasized the importance of America remaining, keeping its dominance in the AI race. If America is overly restrictive and simply cuts off any access to their chips, that's only going to embolden China to move quicker and faster to develop their own. So, and I think that resonates with the White House. So we already have seen a successful path here. They're in talks to get this done. I would be frankly surprised if we don't see something done within the next 6 months. And to answer your question, I think it would be actually very good, mainly for the reason that it does help keep. It'd be great for Nvidia. It gives them access to a huge Chinese market, but it also helps keep America on top in the AI arms race. Now there are, national security concerns and things like that that have to be hammered out. And, critics have kind of, pounded the drum on that. It's not a trivial thing, but net, I think it's very good for America. I think it's very good for Nvidia.
I want to pull back a little bit and go back to earlier this month to something that the OpenAI CEO Sam Altman said, which is that investors as a whole are overexcited about AI and that this could be a bubble. So he's Mr. Chat GPT. Why shouldn't we believe him, or should we?
I think, yes, in the near term, like any good kind of secular transformative revolution, and he drew parallels to the dot-com bubble in the 90s. The internet was transformative, but that doesn't mean these stocks can't get overvalued. So I think, yes, we absolutely have to, take that into consideration. And that was obvious for a lot of investors anyway, when you look at these valuations, these forward PE ratios. But zooming out, the secular trade, the AI trend is still very much in place. It's still very strong. If anything, I think Sam Altman probably wanted to kind of come out as a sobering voice within the broader AI community, saying, let's not necessarily just get out over our skis here as investors. So I don't think it's a bad thing. I definitely think it's something investors need to, take into account when they're thinking about kind of, how to approach this space, but also recognizing that long term, the tailwinds are still very much in place.
So, should we assume that NVIDIA is the bellwether for the AI trade, or how about AMD? Will that catch up to it, or some of the chips that are being made in-house by like an Amazon or a Google?
In the near term, yes, Nvidia is absolutely the bellwether because let's remember this is, basically the AI pickaxe seller, for lack of a better term. Its chips are powering everything from ChatGPT to autonomous vehicles. And when we zoom out and look at, AI, I mean, that's, by some analysts' expectations, that's, accounting for over 60% of the S&P 500's gains since 2023. That said, as we've discussed, AI has, or Nvidia in particular, has, gotten frothy. Investors have started to, price in. It's priced to perfection. Investors have, started to cool a little bit in the stock. We've seen some profit taking. We've seen some rotation out of that name. And AMD is absolutely now finally gaining traction with its new MI300 chips. Amazon as well and Google are developing, in-house silicon to replace their reliance on Nvidia, but that's still a little bit of a ways away. A lot of that is still niche. So for now, Nvidia is very much kind of the AI proxy, the bellwether, but investors do need to watch broader supply chain. The story is shifting from kind of a single bellwether like Nvidia to a broader ecosystem play like AMD, like Microsoft, even some of the cloud giants. And that's, part of where we are in the cycle. It's perfectly natural.
Nvidia's stock is up more than 60% since Trump's Liberation Day on April 2nd. Where do you see it headed, say, by year's end?
So that's the million-dollar question. We would definitely urge caution here. I think it's very indicative of what we've seen just with investors, as we pointed out, despite, what was frankly really strong earnings, just even a little bit of a miss on guidance, the stock was actually down a little bit. I wouldn't be surprised if we see it kind of trade sideways into year end. That doesn't mean it could be, it couldn't be up or down, call it 10%. But I wouldn't have huge expectations necessarily for continued price increases through year end. Now, that said, again, if we look, all markets, pull back at points in time, especially when valuations get lofty. We're facing some potential macro headwinds as well. So if you're, a true believer, which many are, we think makes sense, starting to, dollar cost average in on pullbacks could make sense. Or, rotating into broader ecosystem plays. But yeah, I mean, we would definitely urge caution with Nvidia stock, through year end.